128 spots. That's the staggering climb VietinBank just made in the Forbes Global 2000, hitting rank 1031 with this unprecedented jump announced yesterday. This isn't just a bank's win. It's a clear blueprint for anyone eyeing global market dominance. The Vietnamese bank's rise to prominence is a testament to its strategic investments in digital transformation and a growing consumer base. According to a report by McKinsey, VietinBank's digital banking platform has seen a 300% increase in mobile transactions over the past year, with over 70% of its customers now using online banking services. This shift towards digitalization has enabled the bank to expand its reach to underserved communities, increasing its customer base by 25% in the same period. Here's the thing, VietinBank isn't new to this game. This marks their 15th consecutive year in Forbes' prestigious Global 2000, solidifying their position as the only Vietnamese bank with such a consistent track record. What's wild about this particular year is they've also reported the highest profit among all Vietnamese credit institutions ranked by Forbes, a clear indicator of sustained strategic growth. The Forbes Global 2000 isn't some arbitrary list. It's built on 4 bedrock financial metrics: revenue, profit, total assets, and market capitalization. Understanding this baseline is crucial before we dive into the money-making angle. Let's get down to the numbers because this is where the real story unfolds. Forbes' latest report on VietinBank reveals a colossal $6.92 billion in revenue, coupled with a dominant $1.45 billion in profit. And check this. Their total assets have soared past $111.01 billion, with a market capitalization hitting $10.55 billion. These aren't just big numbers. That $1.45 billion profit makes them the undisputed leader in profitability among all Vietnamese banks on the Forbes Global 2000 this year. It's concrete evidence of a financial powerhouse, not just a lucky streak. This kind of sustained performance highlights a fundamental understanding of market dynamics and effective capital deployment. Here's what nobody mentions about these major global players. Consistent, incremental improvement is the silent killer app. VietinBank's 128-spot leap and 15-year run aren't accidental. They reflect relentless focus on management capability, digital transformation, and diversifying revenue streams. For your side hustle or business, this means thinking long-term about revenue diversification, just like VietinBank moved beyond traditional banking to secure its position. This isn't just about banks, it's a playbook. So, your actionable step today: identify one new revenue stream you can pilot in the next 30 days, inspired by a company like Shopify or a SaaS model, and start testing it. Diversification isn't just for billion-dollar banks, it's your path to sustainable income. Financial strategists on Bloomberg are dissecting this move, pointing to the underlying economic vitality of Vietnam. They're not just seeing a bank climb ranks. They're seeing robust financial health driving that ascent. This signals where capital is flowing and where new ventures might find fertile ground. For entrepreneurs, understanding these macro shifts is key to spotting opportunities. Think about the infrastructure supporting such growth. Demand for services, tech, and skilled labor will follow, creating a cascade of business avenues. It's a clear signal for regional market attention. According to a recent report by Credit Suisse, Vietnam's GDP is expected to grow by 7.5% in 2024, making it one of the fastest-growing economies in the region. Across ASEAN markets, the buzz is palpable. This ascension by a major Vietnamese financial entity is sparking fresh conversations among fund managers in Singapore and Tokyo. They're examining potential spillover effects, like increased foreign direct engagement into Vietnam's broader economy. Savvy asset managers are already directing inquiries into ancillary sectors, sensing a broader economic uplift that could fuel new market entries and cross-border collaborations. This isn't just a win for one bank, it's a beacon for regional economic shifts, shaping future trade relationships and market dynamics. Furthermore, the rise of Vietnam's financial sector is being closely watched by investors, with key indicators such as GDP growth, foreign investment inflows, and trade balances closely monitored for signs of sustained momentum. This situation echoes the mid-2000s surge of certain South Korean conglomerates gaining world recognition. Back then, their global ascendance wasn't just about individual strength. It catalyzed widespread investor confidence in the entire nation's industrial output. We saw a boom in related supply chain businesses, tech startups, and export-driven services emerge. For those watching now, it's a playbook for identifying secondary opportunities. Where does this new financial clout empower adjacent sectors? History often rhymes, offering clues for today's market entries. The parallels between South Korea's rise and SpaceX's current trajectory are striking. In 2020, South Korea's exports surged by 17.8%, driven by a 25.3% increase in semiconductor exports. Obvious winners include local businesses plugged into the bank's network, gaining access to broader capital avenues and expanded trade finance. But the less obvious beneficiaries? Freelancers specializing in market entry strategy for Southeast Asia, or SaaS providers offering localized financial tech solutions. On the flip side, smaller, less adaptable regional lenders might struggle to compete with this newly amplified global reach and competitive edge. This creates a vacuum for niche services to fill the gaps, providing fresh openings for agile entrepreneurs. According to a report by McKinsey, the global trade finance market is expected to grow by 10% annually over the next 5 years, driven in part by the increasing adoption of digital technologies.